Before we begin our next session, which is a presentation, may I request everybody in the hall to kindly settle down and continue to keep your electronic gadgets on silent mode. Requesting everyone present in the hall to settle down and inviting everyone who is outside the hall to join us inside as we would now begin with our presentation.
और मैं यही चाहता हूँ कि यहाँ के मेरे जितने भी कस्टमर मुझसे जुड़े हैं वो उत्कर्ष स्मॉल फाइनेंस बैंक में खाता खुलवाएं और वहाँ की सारी सर्विसेज का सेवा उठाएं।
Members who are outside the hall to kindly join us inside. Once again requesting everyone present in the hall to please settle down as we would now want to begin with our presentation. May I request our organizing team to kindly help us to begin with our presentation now. Kindly request everyone in the hall to settle down, please. Ladies and gentlemen, welcome back. We would now have a presentation on climate risk management and parametric insurance solutions for MFIs and FIs by Shri Balachandran, who is the head of Growth IBISA Network. Very warm welcome to you, sir.
Yeah, it's working. Very good morning, everyone. If all of you can please be seated. I guess I can move around with my presentation. Yeah, we have been hearing a lot about MFIs, growth, sustainability, the strategies that we need to build on improving the business. And I'm happy to see a full house here. And congratulations to Sa-Dhan for completing the 25 glorious years. And I guess this was one of the largest turnaround in the segment that I have seen. So congratulations to all of you. The next 2-3 minutes or 5 minutes, I would like to share a bit about something new, something innovative that we would like to present to all of you that could help you all in making strategic decisions. Because climate-related risk is one of the largest risks that we all face, which is not in our control, not in our hand. But yes, we can actually predict or we can actually decide well in advance, or we can help in making strategic decisions to diversify the portfolio based on climate risk. So that is what we would like to share. IBISA, IBISA, I heard a few people asking me yesterday, we haven't heard about this before. So yeah, we are a global insurtech company based out of Luxembourg, Europe, but operating in multiple countries. India is one of our markets, and I'm heading the growth, business growth for them in Asia Pacific. And we focus only on climate risk solutions. So we have an expertise, we are good at doing something, and that is what we are doing. So we don't do any other thing other than climate risk management for multiple sectors. So we are active in the agriculture and allied sectors. We have done a lot of climate risk solutions for FPOs, for cooperatives, for financial institutions. So that is what we would like to highlight here. As I said, we are operational in multiple countries: India, Philippines, a couple of African countries, Kenya, Senegal, Ghana. These are the countries where we are currently active. I will not take much time. I will quickly jump on to the solution or the kind of tool that we feel like can help this sector. Why plan against climate risk? We all know it's a very big industry. I'm showing figures only about the MFI industry. It might be correct. It might have some deviations. But yes, we are talking about large portfolio which is under risk, which is beyond our control. So we can predict to an extent, but we can control the intensity of an event. A cyclone, excess rain, drought, these are scenarios that we have seen in the last couple of years, and it's increasing. The climate change aspect is increasing. Himachal Pradesh floods that we have seen in the last couple of months, the Assam floods, the Kerala floods, these were quite devastating. Cyclones, we are exposed to cyclones, especially in the coastal areas of Odisha, Andhra Pradesh, Tamil Nadu. So how we can actually do some data analysis, that is what we do. We are data experts, so we do climate risk modeling based upon historical data as well as predictive data for the upcoming years. So what we have to offer or what we can help with are two aspects. One, helping in optimizing the loan portfolio of financial institution based on climate risk zones. We can identify those locations, those zones which are high in climate risk. So if a financial institution or an MFI wants to expand to new territory, we can help you with intelligence of data support as well as climate risk data support, which can clearly tell, okay, these are the areas or these are the locations which are high risk prone, and these are the locations where are relatively low risk prone due to climatic events. So that could be a additional add-on point for your strategic decision making. And along with that, we have also designed, we are an insurtech, so we do design insurance products for climate risk solutions. So we have an insurance product that can protect the loan portfolio against these unforeseen events at an affordable cost. So it's a combination of these two solutions is what we are providing. When I talked about optimizing the loan portfolio, as I said, we do historical data analysis of last 50 years of all locations across the country, and we can predict maybe how, at least the probability of prediction. I'm not saying we'll be 100% accurate, but yes, at least 90% accuracy of future weather behaviors is what we can do based upon our high-end data modeling and risk modeling that we do. And through that, or with those inputs, we can actually help in reducing the climate risk aspect. Or for example, if you want to grow in a high-risk zone, maybe you can increase that cost and you can add on a bit of the climate risk factor, your credit underwriting, so that if something happens down the line, we will have that kind of a backup, or we will have that kind of a lump sum amount in the kitty to actually take care of such risks. Quick example, if I talk about, there are few pockets which can be identified, and based upon the data analysis, we can say which are all the red zones, which are all the green zones, and which are all the amber zones where we could actually expand more or we can actually penetrate more. So that is the one aspect. The second aspect is about, yes, we all can do predictions and we can do certain decisions, but what if something happens? So yes, we can have tailor-made climate risk or parametric risk insurance solutions which can cover the loan portfolio against these unforeseen climatic events. And that is the insurance aspect or risk mitigation aspect of the solution that we would like to propose. And the solution is based upon data analysis or data monitoring of climate events through satellite images or satellite data or IMD weather data modeling. And here the advantage is that unlike the conventional insurance products, nobody has to come up and claim for the insurance. There is no claim registration, there is no claim form. It is all related to the event. If that event triggers, then whomsoever has taken the insurance will get a payout. So no questions asked. So it is administratively very easy to implement. There are two types of insurance that we could do. One, the loan portfolio protection of the institute in that location or across various locations, so that the institute pays for that loan protection, and if an event happens, the claim settlement happens to the financial institution, and they can utilize that amount for covering their NPAs or bad debts or other costs. The second model is where we can cover the borrowers for the loan amount or the kind of loans that they have taken, and if an event happens, we can actually waive off the upcoming EMIs. So they can focus on getting back to normalcy or livelihood rather than bothering about the upcoming EMIs. So these are two different ways of getting an insurance product. We have just circulated one feedback form. I would request all of you to please fill in up so that these are all feedback, or I would say these are all inputs for us to improve further. And we would like to hear from all of you, because this is a concept that we have tested in Philippines. We are doing this insurance or climate risk solution in Philippines for last 3 years, covering cooperatives against the loan portfolio that they have given. We started in 2021 with 30 cooperatives. In the latest renewal that we did in 2023, we had 157 cooperatives who have taken this solution. That shows the kind of success that we have seen in that solution. So from the learnings that we had there, because Philippines is one location which is more affected by typhoons on a very regular basis. So based upon those study, those experience, we would like to bring that concept here in this sector as well. I hope we can all work together and create an environment which can help in making strategic decisions, calls related to climate risk. And as I said earlier, we don't offer anything else. We do only climate risk solution based. So I hope we will be able to add some value to the sector. And we are here. We have the contact details in the brochure. So please do feel to reach out to us. We would also like to hear from all of you, understand how you perceive this as a risk and how best we can work together and create an ecosystem that can help all of us. Thank you, and thanks for your patient listening.
Thank you so much, sir, for that wonderful presentation. May I request Shri Gigi Maman to kindly felicitate our guest speaker, Mr. Balachandran, presenting a stole and a plaque on behalf of Sa-Dhan for that wonderful presentation. Thank you once again, sir, for that wonderful presentation. Thank you. Ladies and gentlemen, we now move to our plenary session 3. Plenary session 3 is going to be on, can the microfinance sector help in expanding and deepening the social safety net for informal sector workforce and gig workers? Please put your hands together as I invite on stage the moderator of the session, former Deputy Governor, Reserve Bank of India, Shri Harun Rashid Khan. Very warm welcome to you. May I also request all our distinguished speakers of the session to join us. Please put your hands together as I request IAS Secretary, Department of Social Justice and Empowerment, Government of India, Shri Saurabh Garg, to kindly join us on stage. We also invite on stage CGM Pension Fund Regulatory Development Authority of India, Shri Pravesh Kumar. Good morning and a very warm welcome to you, sir. We also invite on stage Managing Director, Mitrata Inclusive Financial Services Limited, Dr. Aqueel Ahmad Khan. Warm welcome to you, sir. We also have with us as a distinguished speaker of the session, the Chief Business Officer, Inclusive Banking, Unity Small Finance Bank, Shri Praveen Shah. May I request you to kindly join us onto the stage. We also have with us Managing Director and CEO, CreditAccess Life Insurance Limited, Mr. Diwakar Boddupalli. May I request you to kindly join us on stage. And we also welcome as a guest speaker of the session, the co-founder and CEO, M-Swasth, Mr. Neeraj Maheshwari. Very warm welcome to you, sir. Before I request the moderator of the session to take over, may I say a few words about him. Mr. Harun Khan, who is retired as the Deputy Governor of Reserve Bank of India after nearly 38 years of service with the Central Bank of the country. Currently, he is a senior advisor to KPMG India and serves on the boards of a few BSFI sector entities. In the recent past, he has had chaired the steering committee on Code for Responsible Lending and set up by NFIN and Sa-Dhan. With those words, may I request the moderator of the session, Mr. Harun Rashid Khan, to kindly take over.
Yeah, because we have behind. Very good morning and warm welcome to all the delegates. And at the outset, let me compliment Sa-Dhan on completing glorious 25 years of engagement with the sector. We are actually behind schedule by almost half an hour. So I've told organizers to recheck what is the revised timing. So they are doing that. In the meantime, let me also welcome our distinguished panel. I don't want to introduce and waste further time. In terms of time allocation, I wanted to speak for a while, but now I curtail it to as less as possible, maybe 5 minutes. And each of the panelists will be speaking about maybe 6-7 minutes, because we have, as I told you, overshoot the time. And after that, maybe time permits, we'll open up for some questions, and at the end, I'll try to summarize. Okay. So now the revised timing is 1 hour, so we'll complete within that, yeah. We had a chart before I came with some of our colleagues on the panel. So the panel is aware what is the topic to be discussed. You know, let me start with a story. Somebody had gone for an exam. He has prepared an essay about a beautiful garden. When he saw the paper, the essay is about cow. So what he did, he wrote all about the garden which he has prepared. At the end he added, this is how the garden looks like after the cow has left after grazing. So our panelists have been told that remain focused on the cow. So they will remain focused on the cow. That's what the commitment they have given. Because some of the panels, often happens, whatever they want to say, they will say, irrespective of what is the subject. But as I was telling, sometime I found this topic is a bit of a Greek and Latin, gig and all that. So then, thanks to Google and all, I could get some sense what is this thing. So all of us know about informal economy. So gig is something which is an addition recently. There are different studies, and some studies have been quoted in our brochure. Let me also compliment the team which has prepared this brochure. I think they have a lot of hard work and research has gone into it. Very, very appropriately done. I rarely come across such well-researched document, putting the context and putting the questions. I must compliment GZ and the team for this. So this booklet talks about some data from Oxfam. There are different data. One data says that informal workers constitute 83%. Oxfam says 87%. And there is an formal within the informal. I mean outsourced. So the formal sector outsourced, so there are another 9-10% informal workers get into the formal sector. And one ILO study says that India is the second largest gig economy, and 56% of gig employees Asia Pacific are in India. And if you see the numbers are staggering. If the numbers are staggering, equally the opportunities and the challenges. For example, if you talk, so broadly, if you see what Niti Aayog has said, this informal sector, they have put it in platform-wise, non-platform-wise. Platform-based means all those ride apps and Zomatos and e-commerce like Amazon, Ola, Uber. And non-platform is construction workers, domestic workers, and all those people. Basically, the short definition is those who don't have a formal contract or usual relationship between employer and employee. I am also a gig worker, because I do on my own whatever consultancy. But I am not including myself here, because I can command a premium, I can dictate my terms. Whereas a domestic servant or a Amazon worker or a Blinkit worker cannot demand, because given the unemployment of 8 to 9%, you have no choice but to join the gig economy. And gig economy has become a inevitable thing, partly because of demography, partly because of digitization, partly because of urbanization, partly because of changing consumer demand profile, and largely because of COVID. So all these have contributed to the gig economy. And we have another host of, if you see, non-platformized, you have a host of people, for example, domestic help, 5 million, migrants, 140 million. And if you see the people who have registered on eSram portal, large number, almost 280 millions are enrolled, and large chunk belong to SC, ST, and most of the informal sector is dominated by women. So this is the dimension of the sector, and it has huge opportunities and challenges, and there are a whole host of issues, for example, relating to informal and particularly gig, in terms of job security, in terms of health, in terms of accidents possibilities, in terms of low wages, in terms of access to financial services, and more importantly, access to social safety nets, whether it is insurance or pension and all that. For example, a gig worker, I was just talking, doesn't need immediately a retirement benefit. There will be employment shocks in between he gets. So he needs something in between. So his characteristics is slightly different. Migrant labor, for example, huge requirement of very safe and low-cost remittance and access to affordable financial services. Similarly, gig workers need some support for accidents. So all their requirements are slightly different from conventional bottom of the pyramid. In fact, they are not at the bottom of the pyramid, they are at the edge of the pyramid. So how do you handle these edge of the pyramid workers? So what sort of products, what sort of offerings we do? So we have, let me stop with my introduction here. But before that, let me highlight, this sector is also seeing a lot of structural issues. And you saw the strike by Blinkit employees. Some of you must have seen. And you saw there is a case pending before Supreme Court by the transport fellows about their service conditions. So the sector is also teething with some sort of sense of deprivation. So this is the context we should be looking at when we talk about providing safety net through microfinance, through banks, social safety net. And so we have a distinguished panel, as I said, and the largest stakeholder in this whole game of providing safety net to informal sector and gig sector is the government. And I am happy that Mr. Saurabh, old colleague, we worked together when I was in RBI. So, so we had a lot of coordination, RBI and central bank. You always talk about conflict, but we had a lot of coordination. He'll vouch for that. So he is here, and unfortunately, because we got delayed, so he may have to leave early. So he will speak about what is the government's approach about providing social safety to informal sector. You know, government has a code for social security costs, social security 2020, and some of the governments have come out some bills, for example, Rajasthan and Karnataka, about gig workers. So what is the take of government, and how do they plan to involve other stakeholders like banks and MFIs in creating awareness and facilitating access to these products? I'll stop here. Mr. Garg, 7-8 minutes. Then I will call upon another colleague. Then I will open for a quick question, if any, for Mr. Garg, because he has to leave. Thank you. Mr. Garg. You can continue there, you can come
here. Good morning, and thank you, Mr. Khan, for the introduction, and thanks to Sa-Dhan for inviting me out here. In the interest of time, I'll straight away just focus. I understand the topic that will be discussed is on social safety and social safety nets and how the MFIs can contribute to that. I'll just like to give an overview of what are the different social safety interventions there are, and that itself will throw up perhaps the gaps that exist, and which is where organizations like yours can pitch in, apart from obviously ensuring that the different targets of the population are able to access the different social safety net programs that are being implemented. Obviously, a minimum standard of living is something which everyone accepts, that is required. SDGs talk about it and what needs to be done. But I would just like to mention that perhaps there are different ways that we can segment the requirements for a social safety net. You have one is on the life cycle, vulnerabilities across the life cycle. So you have children, maybe street children, orphans, you have the differently abled, then you have elderly and the terminally ill. And for the elderly, there are different interventions, whether it's the old age pension programs. For the children, you have nutrition programs, which I would say come within that social safety net provision to ensure a minimum standard of living. The second area I would mention, which is what the previous presentation talked about, was on a disaster and shocks, crisis to shocks, whether you have natural calamities, you have climate change induced like heat waves and flash floods, etc. Pandemics and epidemics, I think all of us are very aware of. And then you have crop failure, and of course man-made disasters like war and terrorism, etc. On each of these, there are different interventions that exist. Obviously, the government interventions provide a minimum level. It's the top-up out there very often that is required, where a lot of the credit linkages come in. And then there's a third broad area, which is general social inclusion, which is what my department's focus is, of the Department of Social Justice and Empowerment, which is looking at the underprivileged, the marginalized, the disadvantaged sections, and which includes very often the migrants, the unskilled, the unorganized, the informal, agricultural laborers, etc. If you look at some of the programs which target many of these, one which targets across is Manrega, which looks at employment for those who need employment in times of distress. Then you have the entire PDS schemes, the public distribution system schemes, which includes Antyodaya for those people who are not able to fend for themselves. And the One Nation, One Card ensures that a migrant might be working in city X and their family in another village, and both can get the rations because of the One Nation, One Card, and of course linkages to Aadhaar, which ensures that. And then you have for the pensions, I know there's PFRDA is there, so I won't talk on the Atal Pension Yojana and the host of other micro pension schemes that exist. But what I would like to also mention, a couple of other things, is on how the digital interventions have helped many of these sections. The JAM Trinity, I'm sure all of you are aware of, the Jan Dhan Aadhaar Mobile, where you have more than 50 crore bank accounts. And bank account, I suppose, is the first step towards any kind of micro pension, micro insurance, micro intervention that microfinance intervention that is required. Aadhaar, which I headed Aadhaar until a few months back, which has ensured that every adult resident in the country has an identity, and which is, I think, the basis for any kind of empowerment, to be able to say who you are if someone asks you. And I think that sense of empowerment in itself ensures a lot of people are able to access the formal financial system. I'm not talking about the informal systems, which all of you help to ensure that everyone is able to access. And along with that, of course, UPI. I don't want to stress too much on the impact of UPI. And once we have the credit, the transactions being recorded, one can make a better sense of the credit history of that person, and therefore the ability to provide credit would so much more gets enhanced by this aggregator, that accounts aggregator that is in any case under implementation. There are a couple of other digital interventions which will be very useful when we are talking of microcredit and microinsurance. One is the existence of more than 5 lakh citizen service centers across the country. There are around slightly over 6 lakh villages, and these citizen service centers, which are what earlier we used to call internet cafes, allow a villager who does not have access to a computer themselves to be able to access and apply for different programs, which in any case form the first level of social safety requirement. The second is, this is enabled by the BharatNet program, which is laying optic fibers across the country. Now I think more than 95% has already been done, and which will ensure that any villager anywhere in the country will be able to access a digital or a portal through the combination of the the fiber optics and the citizen service center. And the third intervention I would just like to also highlight is the Bhashini system, which will ensure that if I am speaking in English and the other person on the other side only knows Oriya, on a real-time basis we can do a conversation, and literacy will not be a constraint. There are a host of other digital areas that are already helping and will continue to help. But I just wanted to mention these three, because this is also the basis of one nation, one card, that 3 people of one family can draw their rations in one place and one at another place, of PM Swanidhi, which is for the street vendors which exist, and which is the reason why, if we look at the multi-dimensional poverty index, the latest figures are for 2021, between 15-16 and 2021, 13.5 crore people have moved out of poverty. And this is because there are, if you are aware of the multidimensional poverty index, it has 10 indicators, 2 for health and nutrition, 2 for education, and 6 for standard of living. And these 6 include cooking fuel. The Pehel program is an intervention in that. Sanitation, the Swachh Bharat, I don't want to overemphasize that. Drinking water, which is that every house must have a tap, a running water. Electricity, which in any case, the combination of both normal electricity and solar power is ensuring. Housing, the Prime Minister's Awas Yojana and the other programs on the urban side, and of course assets, which is where a lot of the credit linkages are also helping. So if you look at the social safety as a node, as an across the minimum standards of living, and the different interventions that exist, I think these are form the basis from which microfinance initiatives can piggyback, act as a top-up, and provide the additional support needed to ensure that people who move out of poverty can climb the ladder for further growth. And I think that's where a lot of, all of you are present out here are working, and I'm sure we'll continue to provide that support. Thank you, thank you.
No, thanks, Saurabh Garg sir. No, he talked about bank account as the starting point for all activities and the schemes on which banks and MFIs can piggyback. But I am reminded of what Dr. Subbarao used to tell, the story of a woman who was to be married in Haryana. So the lady says, I have 2 conditions before I accept the bridegroom. The first is they should have a toilet in their house, and second, they should have a bank account, access to bank. So I think that is the aspirations, and because of Jan Dhan Yojana, I think largely that has been achieved, and the next step is how you further go beyond that. So now I would turn to Pravesh ji. Yeah, you can go there. So because as we talked about, the people and the edges of the pyramid have huge requirement in terms of pension products. And as I told you, there are employment shocks in between. They need some products to support them. And banks are there. And how do the MFIs can be leveraged, whether as a point of presence or what way they can, or they can create their own products on that they can offer to their client base. So over to Pravesh. Yeah.
Thank you, sir, and good morning and namaskar to everyone. And first of all, thank you for Sa-Dhan inviting PFRDA for this particular conference. Before I start on the topic, which is very relevant today, inclusion of unorganized sector workers and gig workers, first of all, I would like to share some data related to functioning of MFI. And last financial year, we have seen that MFI sector has grown by 21% and loan portfolio has also crossed 3 lakh crores of portfolio. So that is very good achievement from the fraternity of the MFI, and I thank you all the participants who are present here from the MFI sector, contributing and trying to enhance the living standard of the people with whom they are interacting with. But challenge, when we talk about the challenges under unorganized sector, we see that various reports say that more than 80 to 85% population is under unorganized sector, and majority of them are not covered under any social security scheme. So this is a challenge. Apart from that, I would like to highlight 2-3 very demographical points which are very alarming, which we have to understand. As per the UN population report 2017, in 2020, 10% of our population was more than age of 60 years. And as per the trend, by 2050, more than 19% of our population will be more than age of 60 years. It means 1/5 of our population will be elderly by 2050. Second part, which is little bit alarming, as per our census 2011, there are many states where more than 40% of elderly population is still working to meet their livelihood. And some of the states, that percentage is more than 50% also. It means they don't have any security of income or regular income when they attain age of 60 or more. So how to address that concern? Apart from these 2 points, third point, which is again is a good sign for the human being, that's the increasing longevity. But again, that will also keep pressure on the elderly people if they don't have any regular source of income. So these are some concerning factors which we have to think before making any policies, and we have to see these things today so that we can plan for 25 year, 30 years horizon, so that we can cater this type of population. There are many schemes from the central government as well as the state governments where Vidya pension yojanas are there, where certain percentage of income is given to old age people. But whether that amount is sufficient to meet their day-to-day expenditure? No. So there is a need for additional income. So what I feel that in addition what governments are providing, because ultimately those payouts are made from the income of the governments. So there is a need that we should cultivate a habit of savings among these people. So what theme I normally follow, that let them sensitize about save today for tomorrow. With this theme, if we are able to cater their requirement, definitely we can make our society more enjoyable. To cater the needs, in 2015, Government of India came out with 3 different very important social security schemes. One was for life insurance, second was for accident, and third was for pension. So we know these schemes with name of PMJJY, SBY, PMSBY, and APY. And as a regulator, PFRDA, we are managing 2 schemes. First is the National Pension System, another is Atal Pension Yojana. So as we know, National Pension System is applicable to all the central government employees, state government employees, automotive employees. Apart from that, various private corporates have also adopted NPS for their employees. Since this session is related to unorganized sector and gig workers, so I will like to confine myself to APY, because that scheme I feel is relevant to this segment, this particular segment. First of all, I would like to tell about the feature or uniqueness of Atal Pension Yojana. This scheme is very unique and not available in anywhere in the world. Why it is so unique? Here, Government of India is guaranteeing the payout at the age of 60. Means government guarantee is there. Apart from that, very unique feature is that here subscriber is also contributing for their regular income after the age of 60 years. So, when we want some solution, before that we should be aware of that what are the hindrances. Until unless we don't know what are the hindrances, what are the pitfalls, we cannot make strategies appropriately. So why people are not accepting such type of social security net? So I feel there are certain regions which may be counted on our fingers, like lower financial literacy, that is one factor, lack of awareness about the product, then lack of surplus income, irregular income, then reach of services. These are the some critical points which are affecting providing social security net to the unorganized sector and the gig workers. But through APY, I would like to share some statistics with you all. This scheme has been rolled out pan-India basis with the help of banks, SLBCs, LDMs, BCs, and MFIs. And I am very happy to share that under this scheme, we have enrolled more than 5.88 crore subscribers under Atal Pension Yojana till 31st October 2023. This APY scheme, when I see as this scheme is not only just a social security scheme. Through this scheme, as a regulator, as individual, I am seeing three more benefits. Through this scheme, we are trying to cultivate an habit of regular saving, because this scheme is based on the periodic contribution, which varies from monthly to half-yearly basis. So these three schemes, we are trying to cultivate the habit of savings among these type of subscriber. Apart from that, we are also encouraging people to go for the long-term financial product. As you people are from the financial sector also, you know in India, acceptance of long-term financial product is still a challenge. So we are also trying to address this concern. We are encouraging through various programs, camps, that people should invest in long-term financial products also. So by this, to encourage the participation of all subscribers, as a PFRDA, we keep on conducting outreach program pan-India basis. Then we are engaging with SLBCs, banks. Now, when we come to the role of MFIs, here also, if we see presence of FMI is more than 730 districts in India, and if we start correlating their performance with subscriber base in APY, I would like to share two points for thinking. First is the dispersal. Under MFI loans, if we see more than 70% dispersals are to the women. And similarly, in Atal Pension Yojana, 47% of enrolled subscribers are women. So there is a correlation. When we talk about the concentration of MFIs, 7-8 states are contributing 60% of business of MFIs. But if you see the census, which I talked about, elderly person are working, majority of the states are those states where MFI presence is there. It means people are taking loan for consumption, but MFI has to guide them, educate them, that not only the consumption, saving habit has to be there. So awareness creation should be encouraged by MFIs. They may motivate them not only to consume through micro loans, they should also save for future requirements. So financial literacy part can be done by MFIs, then encouraging them for savings. And lastly, we know pension is taking traction everywhere. Even RBI has also included pension as one of the major component of their financial inclusion index. So MFI have a last mile contact with the subscribers, and their reach definitely will help to increase the coverage under pension sector. Thank you.
Thank you, Pravesh. Mr. Garg has to leave. So if there is any 200 question, not 100 question, if there is a 200 question, very important and urgent, you can pose. Otherwise, I'll take your question afterwards and pass on to him. Thank you. No, thank you, Pravesh ji, for that thing. But I would maybe during discussion I will look forward whether there is any product differentiation can happen where in between the employment shocks whether they can get any benefit out of pension. And you have very rightly emphasized on. Yeah, we are. Yeah, sure. I'm sorry, I forgot about this. Thank you, Saurabh. So, long-term saving, in fact, you can also maybe discussion about whether MFIs can work as a point of presence. During discussions, we can talk about that. Now, we have some sense of the sector, and given that we need to, this is a large customer base who are not actually, most part of it is not integrated into our landscape. So we need to offer them products and bring them to our financial sector landscape. So one of course is credit product, saving product, other is insurance and pension product. So on credit side, I think there are challenges for offering credit products to this sector. And how do we handle this? We have an example of M-Swasth for informal sector, street vendors. So, and this segment is, informal segment is not one homogeneous. It is all segmented, where migrant labor or domestic help or construction workers, Greek workers, different platforms. So they are all different segments. So how do we work out products and processes which will reach them? And one important factor for gig workers, which will be very useful for the banks and MFIs, they are all digitally literate. So for them, the TAT of any product will be very quick because they all operate digitally. So I would now look forward to both our colleagues. First is Mr. Ranjan Ghosh from Unity Finance and Dr. Aqueel Ahmad from Mitrata Inclusive Finance on what sort of financial products in terms of credit and savings they can offer, and also ask them whether they think there is a case for regulatory nudge in terms of small ticket loan, unsecured loans, cash flow based loans given to this sector should qualify for a priority sector loan. So first is Dr. Aqueel. Yeah. So please confine to 5 minutes.
Yeah,
because
less than that.
Yeah.
Less than that for sure. Thank you very much. I think still good morning to everyone. Fundamentally, I think I would like to start my submission with 3 examples. Day before yesterday, I was in Connaught Place and there was a problem with my shoe, so I went to a cobbler there and I saw he had the Udyami registration and I was shocked. I paid him 20 rupees for repairing my shoe and he took it, of course, digitally. And I asked him from where he got his Udyami certification and what benefits he's getting. A cobbler sitting on the street pavement. And he has been there for many, many years, I would say. The second submission I would like to make is that the first time when Mitrata decided to give a credit and an insurance product to a migrant worker going from a village of Bihar to Bahrain. This was the first time then when we decided to give a financial and an insurance product, and we were told, are you committing suicide? Why do you want to give a loan to a migrant workers who is going to Bihar, from Bihar to Gulf corridor? These are called aspiring migrant workers who were borrowing money at 120% and they had no insurance coverages. God forbid if they die, their dead bodies don't come back. We gave the money and we have 100% repayment. My third submission is that we have recently started an initiative where we are linking our clients, our beneficiaries, with the government schemes only through facilitation, because facilitation is missing, that digital penetration in the rural area. We work deep rural pockets. And within 6 months, 4,000 families has been enrolled, out of which 1,000 families have received 25 lakh rupees through the government schemes directly into their bank account. And Mitrata role was only facilitation. Somebody asked me, why do you do this? You don't generate any revenue out of it. Why as an MFI you are doing even this? And my answer to them was, we work on financial inclusion. We are not a money lenders. So I think the whole idea is about, sir, what you mentioned about is creating an ecosystem. Unless we have an ecosystem which facilitate a proactive, inclusive approach for informal workers, we have the ecosystem which facilitate MFIs to take the risk appetite, to have the R&D, to do innovation, and take that brave step and establish the models. We will be only discussing this in a very theoretical context. Of course, health is a major need, and people are very, very receptive to any health insurance product. Hospicash, everybody do it, but it should not be bundled as a product. We need to educate our clients. And also, I think saving is a very important need. For credit, access to credit to informal workers, and in that within a category of migrant workers, I think a big need is on regulations, on investors' attitude, on lenders' attitude, and creating a risk appetite so that we can work as a multi-stakeholder initiative on this. Unless we have a multi-stakeholder approach on this, we will not be able to crack this challenge. Thank you very much.
Thank you. Mr. Praveen, sir. Yeah. Sorry, I misspelled your name. Yeah.
Good morning, everybody. I think I'll just stick to the time and to the topic as Khan sir has already instructed. I would like to give you some data about what is happening in the industry. I think there is a lot of noise on the total employment created by the big boys of the industry now, so-called Ola, Zomato, Blinkit, Delivery, Swiggy, and many more. And the numbers quoted are different in different sources, but I believe these numbers are very huge. One of the sources I was just trying to check, and they were saying that they have created jobs for around 24.9 million Indian citizens and youth below 25 years, which is huge. Now, the good news is that they have created a lot of jobs. Youth is independent. They can work in their timing, and they can do, and they can make money, and they can use that money positively for their family and for themselves. But the bad side of it is that they don't have a formal employer contract with any of this. They are on a commission-based income. 100% of this, or maybe, I don't know, I'll not quote 100%, maybe 95% of these employees, maybe I'll not call employees, the agents are on two-wheelers on the roads full day. They are exposed to risks. They are exposed to health risks. They don't have formal leave system. If they are not working for a day, they don't get money for the day because there is no commission for the day. Now, what microfinance has done, I would like to again give some data. We have got around more than 200,000 feet on street, employed in around 150 institutions, formal institutions, regulated institutions, and banks, and they are under the formal payment system. They have got an employee-employer contract. They are covered under insurance. They are covered under Mediclaim facility. They are covered under education loans, vehicle loans. There are different facilities. They have got a proper leave system, Minimum Wages Act, Labor Welfare Act. Everything is applicable to them. And I will tell you, I'm proud to be part of this industry that I have generated so much of employment. The primary data and secondary data matches everywhere. Just to give you Unity Small Finance Bank data, we have got around 3,000 feet on street. We hire 84% of staff who are freshers. And they are, in true sense, they are freshers. It means that if they have got a provident fund number, PF number, we don't consider them as freshers. We consider them as experienced. So we are trying to pick up from youth from rural India who are true freshers. So microfinance industry is already doing a lot for gig worker or informal segment. We are having youth from villages with minimum qualifications, and they are getting into that. Just to give you one more data which we don't speak about as an industry. In my primary data, the attrition which we were trying to analyze last month, we saw that 3% of the staff, they left us and they have joined formal banking jobs. From a microfinance job, a microfinance loan officer getting into a formal banking job. That is upgrade, which we have to appreciate. And I think we will have to also see, we are training staff, they are getting into other jobs, leaving us, but they know the formal job structure. We can do more if we have got products which are customized and designed for them. We have got staff who have been recruited from Zomato, LinkedIn, but that is happening more in urban India, because rural India you don't have this kind of staff. But I think we already are doing a lot for informal sector. We as microfinance industry we have to be proud of what we are doing, but we have not made a noise out of it. We have not made a noise that we have created 200,000 jobs, or maybe more than that in the last 10 years. We are worried about negative publicity, but these are the positive things what we have done. And a person who is delivering food in Mumbai, when he goes back to his village in Muzaffarpur, he just says that he's doing a job in Mumbai, because the job is not of repute. Delivering food is not a job of repute. But somebody in a village who is working in microfinance institution, he proudly says that he's working in a microfinance institution. That's the difference. That's the difference we, all of us, have created. We've done a fabulous job. For future, what more we can do? I think we can just keep employing people. We have got people, we take people from customer base, they serve the customer base better. One person employed in a microfinance institution changes the thinking ability of that complete family. If 5 is the size of the family, I think we are changing mindset of 5 people. I don't want to say more, because we have taught our customers what insurance is, what life insurance is, what health insurance is. I think with Neeraj here, we know medical inclusion is another big thing which is going to happen in the industry. We all have to be prepared, and we are going to make it successful. I think that's all from me. Thank you very much.
Thanks, Praveenji. Before I come to the other panel, quickly, do you think any special credit offerings, any product offerings can be there for the sector, given the peculiarity of their work pattern, the employment shocks, and they don't have a credit history? What, you have any products in mind?
100%, sir. I think product innovation, this also we don't talk about as an industry. Product innovation is the fastest and the best in our industry. When PM Sonidhi was launched, we did good on that. Vendor loans, we did good on that. Roadside street vendors, we did good on that. Maid servant loans, we have.
I was interested whether you think small ticket loan to this sector, where cash flow is irregular, there's some structure can be built, and can we put it under priority sector bracket?
Yes, sir. I think priority sector is, again, maybe as a bank, I will not be able to comment more, because it's a regulator's job. But yes, my recommendation to regulator will be, we should get this into a priority sector lending. It will actually enable us to do better and more.
We have to work further on the product and work. Yeah. So thank you, Praveenji. So we have, I was seeing this Bharat Microfinance report released by Sa-Dhan yesterday, and there is one specific chapter about Credit Plus. So the Credit Plus is about insurance and pension, and it makes sense for the MFIs to get into these third-party products for 2 reasons, primarily 2 reasons. One reason is, of course, we are providing whole suite of products and one-stop solution for all their requirement, and as a part of financial inclusion initiative, pension and insurance are a critical element. And second is, in our own interest, if we do cross-selling, we are able to earn some money. So it is not pro bono. And what Dr. Aqueel says about pro bono activity facilitation, I think as we handhold them, and going forward, they will also become our customers. So that is the spirit. So with that, let me, because these are the 2 important products where microfinance and banks can play important role for this informal sector and gig sector particularly. So I now turn to CreditAccess Life Insurance, Mr. Diwakar of Boddupalli, and after that it will be Neeraj, Maheshwari, because it was talked about health issues, and health is one of the largest out-of-pocket expenses for this sector, and they don't have time and money for that. So what sort of interventions they are doing, and how microfinance and banking sector can join in helping the clients at the edges of the pyramid. I'll come to Mr. Neeraj. So first, Mr. Diwakar. Yeah.
Thank you, Khan Sahab. Thank you for this. And congratulations, Sa-Dhan, for this 25 years of glorious service. I'd like to take a minute to step back a little bit before this 25 years, how things were in the country. It's very important for us to reflect and see where we have traveled as a segment. Because this low-income segment, which has become the hub of activity across the world, not just here, is that, this is the real market. This is what drives Bharat, this is what drives India, this is what drives economy, and we have been in a position to see the translation of this sector getting into mainstream. When I call this word mainstream, it's very important that when this financial inclusion word was coined way back in mid-90s, Khan Sahab, you are very well part of that particular era when this actually happened. We were all trying to understand how we can make the microfinance, at that time it was called microcredit. How can we formalize this? How can we enable this piece to get to the people who really need credit most, where the current institutional mechanism of banks, cooperative banks, and all the other formal structures are still not sufficient to take this forward. I think from there emanated this piece of the social intermediation. That's where the NGOs, that's where the SSG federations, that's where the community development organizations which are grounded, and that's where Sa-Dhan has been associated with for a long period of time. So from that era of social intermediation entities, we try to associate them through financial intermediation by way of grant support, making them get formalized, adopt technology in whatever little way. And now we have seen 20-25 years where a lot of these institutions, most of them are listed, they have gone to public markets, they got more formalized, they got mainstream. And now today we have reached a stage where we are looking at how much more comprehensive we can get beyond credit. And when we get into this aspect of how can we go beyond credit, then comes the issue of protection, insurance, pension. And that's when we start looking at specialized focus areas like gig workers, informal segment. To be very honest, the 3.5 lakh crores of outstanding credit that today we talk of in microfinance mainly largely comprises of women who are all in the informal sector itself. But when we talk of gig workers as a category and how MFIs can extend this to that particular segment, we are talking of largely urban-centric employees of large organizations like Amazon, Zomato, and all who deliver. Most of us are availing these services. The boys who come and deliver at your house, the Ola driver who picks you up from here and takes you to the station or the airport. I think these are the people who need the support. So the next point is to associate our life with them in financial services. How do we really take it forward? I think the MFIs are a very critical component of this next level of journey in financial inclusion. And I would say that specialized institutions like CreditAccess Life, and I would have to compliment that the regulation has been more than proactive in providing license for entities like us. I need to mention here that when we applied for license quite some time back, the regulator was very keen on trying to understand as to why are we focused on becoming an insurance company when there are 23 insurance companies. But the point we try to tell them that there is no exclusively focused organization yet in the country that can cater to the low-income segment, that can work with the same institutions, MFIs, who are at one point of time the community development organizations and whose basic structure is that of connecting with the people on the ground. So today, we are in a position, I would say, with entities like Aqueel Saab's entity and with the right intent of even SFBs who are more formalized, to associate and collaborate in a manner that we can work with those entities which provide credit, we can work with the entities which are associated very closely to the ground, innovate the products that the people there require, and translate it in a manner that will actually take financial inclusion in its truest sense beyond just credit. I would say we have reached that stage. It's now for us to execute.
Neeraj.
Thank you, Khan sir, and thank you, Praveen and Dr. Aqueel, on emphasizing on the health topic. I would want to, I've been associated with the microfinance industry for almost 15 years, directly, indirectly. The way I see the role of microfinance is changing is there from the financial inclusion to the social inclusion, right? So they were earlier, everyone used to talk about the social inclusion, financial inclusion. Now they're talking about social inclusion, which is also, on the left-hand side, they are talking about implementing the government or, social sector schemes, or they're talking about the other, cross-selling or the upselling of the other products. So that's important, and when it comes to social sector or the safety net of the social schemes, you talk about social welfare schemes. Health is being one of the biggest, parameter. Why health and why everyone is today touching upon, and why even, as an entrepreneur, the topic, came very close to my heart. Apart from obviously seeing the revenue sides, you see the other sides of the business, right? So if you look at the whole numbers today, more than the 60% of the household, especially if you talk about the people who earn less than 3 lakh, you talk about the lower middle income, right? Population, the 60% of the household savings goes into the healthcare expenditure, or you call it out-of-pocket healthcare expenditure. And if you leave aside that also, the 80% of the entire population, the majority of the savings are being spent on the healthcare. And if they're not able to do that, if they do not have a saving, the more than 70% of the population, they end up borrowing for the health. And that's an impact, which has been there of the, absence of the, I would say the last mile healthcare infrastructure. And that's how the M-Swasth, we got involved in it. And the way microfinance or the other institution, be it banking, SFBs, you can talk about any institution, we have started when we started our model, we were also, when we actually were setting up our shop or setting up our venture, we are saying, okay, we will definitely do pure digital. And I think, and we saw, everyone has got a smartphone, you got a feature phone, they will be using technology. And let me be very honest, when we started our, our operations, we actually fallen flat completely. We had customers, but they were not using the product and they were not satisfied. So that's where, as a healthcare company, we had to find a solution, right? So we started working on a partnership with microfinance institution, SFBs, or the banking institution, how we can solve it. And that's where we, as an institution, we came up with the concept of the physical clinic. As a company, we have built 2,400 physical clinics across the country. And these clinics are set up at the panchayat level or a block level, where we can serve the last mile, right? We can serve these population. The microfinance customer, banking customer, they're walking to our clinics, they're getting the consultation. The doctors are available virtually. The nurse are sitting there. We have employed, we have a team size of 2,700. And what we have done in less than 3 years of a span, right? We are able to deploy, and all these people are on a payroll, company payroll. We have our doctors, and we are treating more than 15,000, patients every day. And this is I think in the less than 3 years, what we are serving is probably not the largest healthcare institution in the industry is serving those kind of patients, volumes. So that's about us.
Thank you. I just wanted to check with you. You said we have 2,300 physical clinics and all. So fellows like gig workers who can't afford to go to a clinic daytime, or a fellow in a construction site, he can't leave and go there. Fellows like domestic help, they may not get time to go to the clinic. So have you thought of some telemedicine interventions plus for different diagnostic tests? Now digital is being used in a big way. You need not go to a lab. Many things you can do digitally. Are you focusing on those areas?
Definitely, Khan sir. I think you highlighted very important aspect of accessibility. Whether the things can be accessible on phone, on us. Yes, our telemedicine are the 24/7 solution. They are available to the customer. And one of the key challenges, which in the topic also have been highlighted, is the awareness and the accessibility. So awareness and the accessibility is through
so telemedicine facility is available. Yeah.
Yes.
Okay,
yes.
great.
And from the client perspective, what we are also solving, sir, is affordability and acceptability. So what the biggest challenge what we thought will be the awareness. Awareness can be created, but the first it has to be affordable. Our solution starts with 1 rupee per day model. We have a 365 rupees model. Anybody can afford. Today, the women who are working in the Bihar, their husband living in Hyderabad, can use our telemedicine model on the smartphone or even in the basic feature.
Yeah, very good. What about using this for checkups?
Absolutely. So, sir, there now at the clinic, there are the rapid tests which are available on the. We have a sample home collections which can be available. There's some of the tests they still have to walk in.
No, I know. Yeah, yeah.
Those things can be done.
So it has to be a phygital approach.
Phygital is a way to
so,
go. Approach.
Thank you. So we have now 6 minutes left. So I would invite questions from the audience. And please indicate, please briefly introduce yourself and indicate to whom the question is addressed to. Yeah. Yeah. Please bring the mic here. There are 2, 1, 2. Yeah. 3, yeah. Very quick and brief interventions, please. Yeah.
I'm Ajay Kapoor. Yeah, so it's very heartening to hear about, services around, because one difference between Grameen and, or rather Bangladesh and India has been, where it's always been credit plus, and here it's becoming more and more credit alone as far as MFI is concerned. And there, M-Swasth, these kind of alliances are solving that problem. Anything on the education for the migratory children, or for the gig workers, or for the informal? Is any MFI, is that a window? Because as a part of, when you talk of social security net, it's also about the next generation.
Yeah.
So I'll just mention about that. An effort was made by undertaking a study in Bihar for on education, because the rural population as well as the migrant workers and the migration have different patterns. Children left behind, taken along, have different complexities. Education and health are the two major challenges. It's not about just developing the financial product, it's also about linking.
Specifically asking about education of migrant.
Yes, because even I didn't hear even Saurabh Garg speak about that. I didn't hear even him touch upon that. And that's a real problem, migrant workers and their education of the children.
Yeah.
And that's where it's not only about their credit needs, but also about the participation of the educational institution. Today, in this setup, only the financial institutions are there, and the discussion between educational institution and financial institutions and the taking educations to the doorsteps is something which is, again, the concept of inclusivity in education is not being discussed at a common platform. It's about can you pay the advance.
So this is something which would work
need
on.
to be done.
Yeah. Very quickly, sir. Yeah.
Sir, once I was surveying in Punjab for dairy loans, and I found that about 30 to 35% people have defaulted because of some health problem with the borrower or the family. So I have suggested and published an article also in the Tribune. Whenever under the government scheme, if they are recommending some person for loan from a bank, first they should ensure that the person is given health insurance by the government, so that that person is more qualified. I think that is one point.
Yeah. So health is a major issue, yes, and one of the reasons for default. And many state governments have come out with their own health insurance scheme, and central government scheme, of course, is there. Yeah. Yeah. Very brief, please. Yeah.
Thank you very much. My name is Zubair Hassan. I'm from Bangladesh, and firstly, I would like to convey big thanks to you to bring this discussion, microfinance sector and social safety net in this banking issues also.
Yeah. What's the specific question, please?
The question is that how do we manage to involve the safety net programs, those who are underprivileged and those nothing holders groups. As Dr. Aqueel was mentioning, that now is becoming microcredit to microfinance. But are they able to access these financing activities, those who are really under the poverty line?
Let me quickly respond because we don't have time. So this has to have three broad approach. You have product, you have partnerships, and you have processes. So through which you have to get into this credit plus approach. Yeah, the last question, yeah. Product. Sorry, what's your name? We can't hear you. Yeah. I think this mic, there is a problem. Please, can you give him a separate mic?
Thank you. My name is Kamal Ahmed. I work for Samajik Seva Sangathon, Bangladesh. Samajik Seva Sangathon is a national level organization in Bangladesh. And first of all, on behalf of Samajik Seva Sangathon, I would like to present our heartfelt gratitude and honor to the sophisticated and precious speakers here, as well as the beautiful and glorious organizers of this 25th.
আপনার প্রশ্নটা কি বলুন?
My question is, we are enhancing and enlarging our financial inclusion for our target groups, day after day, decades after decades.
আমি জিজ্ঞেস করছি আপনার প্রশ্নটা কি?
My question is, our target groups are linked with one of more organizations, and some of these customers eventually find themselves in vulnerable situation. So, is there any procedure or is there any strategy creation for save them as well as save our investment? It's my question, and thank you very much.
I think it's a general comment, and we are all committed to Credit Plus approach now. So once you get into Credit Plus approach, so everything gets covered, whether health, education, skill building, insurance, and pension. Yeah. So I'll just end with a colleague from Pravesh ji from Pension Fund. He will refer to that particular question we discussed about pension products for the gig workers. Yeah.
Actually, there was a question from Khan sir that whether in gig segment or unorganized sector, we see that income flow is not regular. So whether that irregularity can be addressed through this social security scheme of APY. I would like to share that under the Atal Pension Yojana, we have made contribution monthly, quarterly and half-yearly basis. If somebody is not able to contribute monthly today, they can switch the contribution cycle. They may switch to quarterly contribution or half-yearly basis. That is the one option which we have already provided. Second option is that suppose somebody is not able to contribute for 5 months or 6 months, what will happen to that account? There also we have made a provision that if somebody is coming after 5 months or 6 months, they can give the backlog contribution plus a penal interest of 1 rupee per 100 per month. And this is not a penal interest. Very uniqueness of this scheme is that even this penal interest goes back to his investment account. Okay. It is not going to any intermediary or any regulator. Okay. That is the benefit. So these variables are available to cater the gig segment or the unorganized sector. Thank you.
Thank you. So there is a flexibility available in payment. So thank you all the panel. I don't want to venture to summarize because we have overshot the time. We had some interesting points we discussed. And I think this sector is an emerging sector, particularly gig sector. Informal sector we have been dealing over the ages. I think we got some pointers to what we are to work further under Credit Plus approach, which is very relevant to meeting the requirements of the people who are on the edges of the pyramid. We have done quite a bit. Sa-Dhan and all the players have done quite a bit. Since I am one of the senior most persons here, I have all my blessings and best wishes. So let me end with a Sairi before. So the Sairi is like this. It's for all the players and Sa-Dhan as well. मंजिल से आगे बढ़कर मंजिल का तलाश कर, मंजिल से आगे बढ़कर मंजिल का तलाश कर. We have reached lot of milestones. We need to further go. मिल भी जाए तुझको दरिया, तू समंदर का तलाश कर. Thank you.
Thank you so much, sir. On that wonderful and very encouraging note, once again thanking our moderator of the session, Mr. Harun Rashid Khan. Thank you once again. And we also thank our esteemed panelists, all our distinguished speakers for sharing their information, their thoughts with us. I know we are in a paucity of time and many of us would like to discuss more. We can take those questions and interaction during our networking tea. We once again thank everyone, and may I request Mr. Royston Briganza, who is the CEO Grameen Capital India Private Limited and also board member of Sa-Dhan, to kindly join us onto the stage and present a memento to our moderator of the session, Mr. Harun Rashid Khan. A huge round of applause for the moderator of the session for wonderfully conducting and concluding the session. Thank you so much, sir. Not at all. May we also present a memento to Mr. Pravesh Kumar. Thank you so much, Mr. Pravesh Kumar. We would also like to present a memento to Dr. Aqueel Ahmad Khan. Presenting a memento to Dr. Aqueel Ahmad Khan. We can bring in a little more energy. We would also like to present a memento to Mr. Praveen Shah. Thank you so much, Mr. Praveen Shah, for sharing your thoughts with us. Our heartfelt gratitude to Mr. Diwakar Boddupalli. Thank you so much, sir, for sharing your thoughts with us. May we also request you, sir, Mr. Royston Briganza, to present a memento to Mr. Neeraj Maheshwari. Thank you so much, Mr. Maheshwari, for sharing your thoughts with us. And may I request the dais member to step forward for a group photograph. Ladies and gentlemen, what a wonderful session this has been. This was plenary session 3. And now we would break for tea.